We're going to start with what one of our traders says is the most important earnings report of the season, even more important than NVIDIA next week.
Stop it.
There you go. I know. I could hold me back here, guys. Walmart reporting before the bell tomorrow. The stock is already up more than 15% this year, hitting a record high just last week. Gains driven by an unlikely group. Households earning more than $100,000 a year made up 75% of Walmart's market share gains in the third quarter. The company pushed higher margin items like Chanel and Louis Vuitton handbags, of other things, not something you computes with Walmart, but that's a big reason why Walmart's e-commerce business grew by 22% year over year in the last report. Online sales now up double digits for 10 quarters in a row. But investors are still worried about sustained growth as tariffs and inflation worries start to mount. Dan, I will look to you. You were pointing out the importance of this report and what it says about the consumer, but it grabs you when you think that this is a more important report than NVIDIA next week.
Guy, before I do this, you want to do the thing with Dom?
Yes, let's do it. It just makes me feel good.
Day two, Dom Chu is back in the seat. It's always an honor to have him here. We are a show that welcomes the guest host, and you are a guest host that we all admire and adore.
I'm just trying to keep the seat warm here while Melissa enjoys whatever time off she's got.
I mean, when you say keep it warm, that's a little creepy.
All right, fair enough.
Interesting setup here.
All right.
You know, when you think about the stock, it's up 15% on the year. It's doubled over the last year or so. I think Karen, a value lady that she is, I know she's going to get in there and have something to say about that. But when I think about the quarter, and I think about what we know about the quarter, I know a lot of folks were really excited when they printed that 22% year-over-year e-commerce number in the last quarter. And I say to myself, okay, it's expected to decelerate a little bit. That was obviously a pretty good seasonal period that they were in. I look at the valuation. I look at where the stock is. I basically say to myself, I just don't know what the sort of results and guidance are going to get this thing going up further. And when you look at the way a stock like this moves over the last, call it 6 weeks or so, it's telling you that it's a very crowded trade, right? And there's plenty of stuff in retail that aren't working particularly well. You can look on the other side of this. As Target, I also say to myself, what sort of inventory issues might they have in front of sort of tariffs if they overbuy, you know, that sort of thing. So I look at this, I just don't see a lot of upside near term. And like I said, the options market implying 5%. You know, in either direction, this is Walmart here. You know what I mean? It just seems kind of odd to me.
Those are Amazon-esque
right
numbers right now, right?
Well, it is. I mean, listen, and I'll just let these guys get in for a second. So where have they kind of been, you know, benefiting from? They're benefiting from stuff that's really helped Amazon a lot. Marketplace, fulfillment, you know, better customer experience, those sorts of things. You can't always put your finger on that. That's why they've had that e-commerce growth, you know, go that way. But to me, I just think it seems like a pretty curious setup into the print.
So, because you are the value spokesperson here, let's talk about the Walmart numbers. And valuation-wise, it's fairly easy to see that at 39 times forward earnings, it's not exactly what some people would call cheap.
Right. No, it's not cheap. That having been said, though, I am long and have stayed long because they've done such a good job evolving their business, right? When you think about how late they kind of were in the e-commerce game versus Amazon. And so I've stuck with it through then, although it is expensive. But I do think as much as it'll be interesting as I care about Walmart as a shareholder, I care about what it says about the economy. And that point that you brought up about the over $100,000 customer is really important. I think that customer is in really good shape, right? That customer likely has some exposure to the stock market. They're certainly employed so I think that customer's in good shape. I think the momentum of the business can continue, whether or not, I mean, it should be, we haven't had a valuation this high in ever, maybe. And I think if you look at the Target differential, which they don't report for another 2 weeks or so, this is as wide as it's been. Target, for whatever reason, seems to be losing that customer a little bit because they don't have the groceries that brings them in. So I don't own Target here at this point. The valuation is super wide, but more than anything else, I want to hear, how is that customer doing? Are they still buying? Are they still feeling optimistic?